Hey guys, well, welcome to our video about loan modifications. I have my other two favorite people, Denise and Lucian, other lead mentors and friends, and have done actually a lot of loan modifications or actually helped homeowners with loan modifications. So how are you guys doing today?
We're doing awesome.
Doing excellent. Looking forward to 2022.
Absolutely. And so let's talk about what a loan modification. So in layman terms, what do you think how would you explain a loan modification?
Well, a loan modification is very simple. It could be complicated explanation, but it's very simple in the sense that a homeowner is in financial hardship. And that hardship could be many things, a loss of job, foreclosure, etc. They're having difficulties making their payments, their mortgage payments. So they're going to reach out to their financial institution to basically restructure the loan, make the monthly payments much more affordable, and extend the terms of that loan.
Absolutely. And so one of the funny parts is it's not only them reaching out to the lender. I know some of the attorneys out there will, in our market or any market, I should say, they're going to say, hey, Mr. Homeowner, you guys stop paying. I could get you a loan modification. So yes, they will negotiate with the lender. The homeowner could actually do a loan modification directly with the lender without paying an attorney. So there's some couple things that I know they want to reorganize their loan. What are some of the things that they would need, right, as a homeowner to actually get approved for a loan modification?
Well, it's very similar to when you're applying for your mortgage for the first time. The process, the documentation falls along the same guidelines, and I will have Denise, share that with you.
You're going to need a request for mortgage assistance form. That's usually the form that you would be completing to provide all of your financial information and the requested information from the lender. You're going to also need your recent signed tax return, the most recent tax return, your pay stub, showing that you have employment and you're able to make future payments, possibly your bank statements, and also there's an IRS form that's required as well.
Yeah, and actually on that IRS form, I know we live in South Florida. What the bank or the lender is actually doing is making sure the tax returns you provide actually match what you sent to the IRS.
Correct.
So they want to make sure. Some common mistakes, people think that, hey, I make $4,000 a month. Is your income verifiable, right? So if you have some side hustles, you're getting paid cash, it doesn't count, right? It's number one. Number two is they're going to actually want to make sure the new payment makes sense with your other expenses. They're going to take your minimum expenses. When I say minimum, maybe if you have a car payment, your minimum credit cards, health insurance, the bank wants to make sure you could actually afford the new loan. So I think that's always important too. Some of the things that a lot of homeowners don't know about the loan modification, and I'll just kind of give an example. Let's say your house is worth $200,000 and you're behind on your mortgage, and I don't know, you're maybe 6 months behind and you owe $15,000 or $20,000 in arrears and payments, and your mortgage is $250,000, right? So they're going to take that $20,000 and they're going to add it to the $250,000.
Correct.
So there'll be late fees, attorney fees, interest, and now you're going to owe $270,000 on a house that's worth $200,000. So even though the payment might be affordable, what are you going to do, right? If you have a repair, right? So the roof, we've seen this with homeowners, the roof, it's got damage, the AC runs out. You need that money or need money to repair those things.
Right.
How many people want to put bad money, after good money, meaning it's going to take you forever to get there on a loan modification to even break even. So I think that's some of the challenges that you do run into. I know you've helped out homeowners with loan modifications. What was the average turnaround time that you saw when they actually did a loan modification?
Usually it's between 2 and 3 months. Anything more than 3 months, something definitely is going on, and you need to reach back out to the lender to find out what's happening.
Yeah, and I love that you said that, because a lot of our attorneys, I know some of you guys are attorneys in our program. We're not picking on you guys. What we're saying is that we've had attorneys or homeowners said that they were been working on a loan modification for a year or 15 months,
Right.
way too long. So I think that's always important too. It's true that the introductory rates are lower. So it might be 2 or 3% is what we're seeing. But it might also be only a 5-year fixed. So do you guys want to explain what that really means if it's only fixed for a few years?
And that's what many of the homeowners need to understand, because if your loan modification has been approved, and as you just mentioned, a 5-year time frame, we have seen some financial institutions just do it for 3 years. So it means they give you that loan modification, your payment is adjusted, lower down for that 3 or 5 year term. And once that term is over, the balloon payment moves back up. So unless that you have a fantastic job and you have received fantastic raises, etc., your income level has improved, you find yourself in that 3 to 5 year time frame back to the same stage you were when you first applied for the loan modification.
Yeah,
And not to mention another pitfall is that, if you miss one payment, you're in trouble again.
Yeah, the loan modification, the bank will basically, deny the loan modification any further, and they will call the loan payment, and that could lead into foreclosure or other things for the homeowner.
Yeah, and depending on the lender, what you'll find is it takes the first 3 or 6 months in the loan modification, it's a trial period. So exactly what you said, if you miss a payment, guess what? That trial period is over. Right. So you want to make sure, even with the new payments, I've seen this happen before with homeowners, they could afford the payment 1 or 2 months, right? Like they're scrounging. Mm-hmm. I mean, this is a commitment. It might be another 30 years. So it's just a Band-Aid on a solution that's not going away, and it's still going to stress you out also. We have also seen attorneys charge anywhere from, I want to say $500 to $2,000 or $3,000 for the loan modification too. So you want to make sure when you're talking to the homeowners, you want to explain to them how loan modification, all that extra fees, principal, interest, attorney fees gets added on, escrow, right? If you haven't been paying your insurance or taxes, that gets added on also. So a lot of people miss that out versus, I know Denise, you being a finance whiz, versus a principal reduction. Maybe you want to just share what a difference between, what a principal reduction, which we are not seeing on loan modifications, versus, what we just talked about on modification.
Well, a principal reduction would be that you're making your payment and your balance, your principal balance is going down with each of your payments. If you're doing a loan modification and you have all these additional fees that are added onto your principal, your base is going to be higher. So your payments may be higher unless they stretch the term out.
Yeah, totally makes sense. So again, this is just a quick little video about loan modifications, how they work. Obviously, we have some more information on details in your materials, but this will give you the quick ups and downs of a loan modification. So again, we're just trying to make real estate investing simple again. We'll see you on the next video.